Alright, boys and girls, welcome back to our series of the 100 days trying to generate profits in the market. So we are chasing a certain goal. We want to prove an edge. So basically today I only took one trade. It was posted in the shorts. You can go and check it out. But it was a simple continuation trade, nothing massive, but we happened to get squeeze a lot of profits. So it was a trade back to the 12 a.m. 12:30 opening range. So I was targeting half of that, if I may show you right there. So half of this. I have reasons as to why I did this, because if I'm to show you somewhere around there, you are going to look at my executions and my exits and entries. So it was just a continuation trade, nothing massive. It was just got out before the reversal. It wasn't luck, it was proper stop loss management. So this was a breaker trade. There were a lot of confluences. First and foremost, if I'm to take you to the 15 minutes, you happen to have, remember our executions are all in the macros, so I'm not looking at anything prior to the macro, and I'm having a 15-minute fair value gap just there. This is a bullish fair value gap, as you can see. So if we can go back to the 1 minute, this is what we call scaling down and looking for entries. So this is a 15-minute fair value gap. I didn't want to enter at the top of this. I wanted a confirmation. So the market didn't give me a confirmation. This inversion wasn't strong enough. I wanted it at least to close above this to be my bullish breaker right there. And you can see it has been respected for quite some time. It has harbored price action for a long time. And this video to be as short as possible. I want to let you enjoy the trade. This was supposed to be my bullish breaker. I had a massive push up after the market took out this low. I expected to enter at this, but this push up was crazy and massive, so I couldn't wait for the market to retrace all the way back into this. Any retracement I got was supposed to be my entry. So the market dropped lower, came back into this fair value gap right there, missed this by a tick, but we have these wicks. I want you to remember we're having lows right here. So any move that doesn't take out these lows, any move that speculates a new low, becomes my mitigation block. So this can be my mitigation block. So I entered at the top of this fair value gap. Market gave me an institutional order flow entry drill. So now this is what you want to see: the market respecting the upper half of the fair value gaps, leaving a big portion of the fair value gap unfilled. So this was a fair value gap just like that, taking the volume imbalances in it off the 15-minute FVG. So this was a sweet entry. Everything was in place, every confluence was in place. So we had this come back into this. This was my entry. I bottom ticked this at the top of these wicks and managed to take it higher to half of the 12 a.m. 12:30 opening range. So I want you to look at the executions real quick, and let me toggle this on, the executions and exit. I want you to look at my exit just there, half of that. This was a manual exit. I didn't put take profits because I expected there was room for the market to expand higher, so just exited at that, because I saw if the market taking a lot of time to go through this range, so I expected it to hold, and That was my entry right there. Rejection of these wicks. Entered at that, got out at that. So everything is precise to the tick. What happened after that? Macro opened up, manipulated higher, took out the high, dropped lower. So market consolidated. 11:50 to 12:10 macro or lunch macro. Market was putting in a move to go lower. So if you can look at 12:30, this is 12:30, 12:31. Market rallies higher, gives you a breaker right there. Market stays within the scope of this fair value gap, and then we drop lower, and that's where that move started from. Alright, so let me let you enjoy the trade. Thank you.